The following is a presentation of TFNN. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Monday edition of the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I hope that you had just simply a fabulous weekend. I know I did. Another year older out there, folks. You gotta love being on this side of the grass. Now, folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it's really about providing you the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is really what it's all about. So let's go take a look at one of our tools. This is the tool that I call enriching your life. Now, who doesn't want to enrich your life out there? Enriching your life, folks, what it requires is but just one thing. It's what I call awareness. You know, enriching your life is just simply about being able to bring joy into your life, and you've got to practice doing that. Enriching your life, folks, it is a deliberate decision to savor. Don't you like to savor things? You want to savor and enjoy all the experiences and possibilities that life can offer you. Let me ask you this question. This is a question you should be always asking yourself each and every day. What is it that you can do today? What is it that you can do right now to make yourself feel richer? Don't you want to feel richer out there? I hope that you do. And what is it right now that you could do? Maybe it's making a phone call to someone. That could make you feel richer. Maybe it's somebody you haven't spoken to for a while, but you know you need to. Maybe it's just simply, I don't know, reserving some tickets to a concert or some type of show, something that you haven't done for a while. Maybe, folks, it's buying Tiger dollars. You know, we've got a new Tiger dollar promotion out there. We'll talk about that later. But maybe it's just simply about investing in yourself. There's nothing like investing in yourself, whether it's through education. Education can be through books. Maybe it's just simply going out and getting a new book and reading a book. You know, I'll bet that many of you, each of you, in fact, I'm sure that each of you live within 50 miles of some type of tourist attraction or something when people would come to your city that they would go visit and do, and you probably haven't done it. You know, we get so used to our own environment that we don't go do those things. Enrich yourself, folks, and go experience everything that is within your reach. I mean, that is absolutely the key. You know, one of the things, as I talk to folks out there, and they say, you know, the key, Steve, is really, if I just had more money, then I would be happy. Is that a belief that is part of your core belief system? I hope not, because you see, what will really happen is that if you have more money, all that you will become is more of what you already are. What's that mean? That means if you're an unhappy person, more money is just going to make you unhappier. In fact, quite frankly, it'll make you miserable. If you drink too much, more money is just going to make you more drunk, if you will. If you are a happy person, then I buy into it. More money will absolutely make you happier, but all that money does is just make you more of who you are out there, folks. So, you know, enriching your life, what I think is not really about money. Enriching your life, folks, it's just simply that genius design of art, and I want you to experience all the art and all the beauty that is within your reach when? Right now, folks. So let's go take a look at these markets out here right now. We've got the markets really trading kind of flat, if you will. You've got the Dow futures off about 25, 26 points. The ES Mini is down about 4 points. It's trading out at 1434.25. If you're watching us on Tiger TV, that'll be the first screen that you see that comes up on Tiger TV. It's the 30-minute chart of the ES Mini. You know, we'll take a look at that. If you're not watching on Tiger TV, you can always catch this show. It's archived on Channel 9 out there. King Dollar is trading up 10 ticks right now. You've got gold off $9 out at $17.31. Silver pulling back a bit, down 21 cents out at $33.48. Light sweet crude off 79 cents, trading out at $95.60. A quick tour around the world, and it's kind of like who's got the hot potato, because it's totally flat. You've got the DAX down, actually totally flat right now, down 60 cents. The FTSE is down $1.90. You had the Nikkei down $2 last night. You had the Hang Seng up 7 points. I guess they were the big leader out there. No, the Shanghai was up 7 points, closing out at 22.35. The Hang Seng has, the Shanghai has got some energy in it. The Hang Seng was up 25 points, only 0.1% out there. Our call number is always 877-927-6648. Would love to hear from you. I was talking earlier just simply about, how do you enrich your life and making an investment in yourself. Folks, there is a new Tiger Dollar promotion that we have out here, and this is absolutely the best way to be able to do that. I'm going to pop it up on the screen here. If you go to the homepage at tfnn.com, that's what you'll see right here. And over right there, dead center, it says Live Trading Real Money, free 5-hour workshop, Tiger Dollar sale. That is the button that I want you to be able to hit on or learn more right underneath it. And that is because this Tiger Dollar sales that we usually do here, folks, usually last for a couple weeks. This one here, it's going to expire this coming Sunday. And so what you want to be able to do, it's just really a decision. It's not a decision of if you should. The question is really just how much should you invest in yourself. And so we usually have programs where you get a 20, 25, or 30% bonus. This is going to be the last time that that type of Tiger Dollar promotion is available to you. If you invest $500 in yourself, you get $600 worth of Tiger Dollars. That's a 20% bonus. $800, you get $1,000 worth of Tiger Dollars. If you spend any time, they now don't expire, and so you have 25% bonus there. But really, the big enchilada there is invest $1,150 in yourself. You get $1,500. That's a 30% bonus out there. So go to the homepage of tfnn.com. Don't wait on it. Don't procrastinate. Just simply enrich your life, and that is the best way to be able to do it out there. Works for all the subscriptions, all the services here available at TFNN, and then you get that bonus. You get to trade live with Tom for 5 hours. That is going to be on October the 5th. He'll be using a live account out there. If you can't join on October 5th, that's a Friday out there. I believe that is also a jobs report day, so he's selecting a time period here where there's going to be, should be some volatility out there. Or typically has in the past. That live trading will be archived, I believe, for a full year on your members page out there. So if we go back and take a look at the ES Mini right now, again, really flat out here. You can see ever since the move that was made on Thursday, and that move taking the ES Mini up, let's see, that was September 6th. The close here was somewhere in the 1430 range. You're at 1434 right now. So really relatively flat, as I say out there. No real signals out here that the market wants to necessarily pull back, with the exception of one signal out here. And so we're going to switch over to the daily index futures. And when I'm talking about signals, when we take a look at the Russell 2000 last week, took out a resistance area. If we take a look at the ES Mini, took out a resistance area. It's going to run into another one, but it took out some really strong resistance out there. If we take a look at the NASDAQ, also taking out resistance. What I'm going to do here is I'm going to pull up the Dow futures out here. And if we take a look at the Dow, what the Dow futures did not do yet is take out resistance. And when we take out resistance, I'm going to go back just simply to the most recent swing point, which was on August the 21st, 2012. On the Dow futures, you got up to 13,308. We'll take a look at the actual index itself because it's really set up the same way out here. Now, what the market did do on Friday, I believe it was doing it while we were on the show, was it got up over that area, but it didn't close above it. In the case of the other indexes, they have each closed above their resistance levels. So now those resistance levels are what, folks? Once you break through resistance, what happens? Exactly. It becomes support. But you don't have the Dow, the top line number here, pulling along. And it's going to need to, so right here, here's what we're taking a look at as the weakness. And it's really, today, I think you just have to concentrate on just simply this one chart, is what is the Dow doing, or what are the diamonds doing, or what is the Dow futures doing, what is the actual index doing. That is really where you need to focus, because that is the weakness out here. And what I suspect we're going to see, the market pull back for a few days. May not start today, but I do suspect we're going to see the market pull back here for a few days, maybe even into Friday of this week. We've got in Germany, their courts are going to decide on whether or not they're going to support the moves by the ECB. I believe that is Thursday sometime. So it would make sense now that the market's gotten up over resistance area for it to actually rest. So I expect the pullback to be relatively minor, even if it pulls back into the old resistance area, the new support areas inside the indexes. We'll take a look at what those areas are out here. But right now, all you want to really need to do is take a look at the Dow, watch what the Dow is doing. It's not giving you much of a signal, but the signal came last Friday when it couldn't get above the high from August 21st out there. Also, what you've got going on inside the Dow is you've got May 1st, May Day. And the high end of the futures out there, 13,284. You're at 13,272 right now. So the Dow is the weak link out here. If it pulls back, you should be saying, hey, Steve, where would it pull back to? Well, I would just say take a look at this uptrend channel that the Dow futures have been moving into, and I would say it would move down somewhere maybe to the bottom of that area, maybe just nothing more than a dead cat bounce retracement. That would be off of the swing point here, low from September 4th out at 12,965 all the way up to the September 7th area. So I'd say 13,187, give or take, is really the number on the futures. If we go take a look at the actual Dow itself, the index itself, let's go see what those numbers might be like and take a look at Friday's close as well. And so if you take a look at Friday's close, if you go back to May Day, the May 1st high out there is 13,338. That 13,338, that was pierced on August 21st. You got to, no, you didn't. It got to 13,330. Well, hold on. Let me make sure I'm at the right thing. 13,330 versus 13,338. So it didn't even get all the way up there. If you take a look at Friday's action, you did have the Dow close up 14 points, but it still wasn't able to get up and over, not just May 1st, but certainly was not able to even get up and over the August 21st level, 13,330. So keep your eye on the Dow here today. If we go take a look at what else is going on in the marketplace, let's go see what the DAX actually has done. It's really totally flat here right now, just down 14 cents. So let's switch over to our charts around the world as soon as we can find that button. There we go. There's the chart. Now, if we take a look at the DAX has had just simply a strong move. Made an A to B equals CD on the downside. It's making an A to B equals CD on the upside. We'll take a look at those two patterns. But first, let's start off with where it's trading. The DAX out here, which was the weak link in the chain, now is showing some strength out here. March 16th was its swing point high. That March 16th price point, 71.9433. You're trading right now at 72.14. 76, you got up and over it on Friday. You actually gapped up a little bit on Friday. Even though the move was small, when you gap, that little window there still shows strength out there. And if you take a look at the gap at the DAX, it actually closed on Thursday near its session highs. The high was 71.72. It closed at 71.67. Again, 71.72. And if you take a look at the Friday open, 71.82. So it's got a little bit of a 20-point gap in there. That tells you there's still strength, especially as it was coming into that swing point. So now, if you pull the DAX back, what you do see it's going into and why it is stopping is because take a look at that waterfall. That is the Niagara Falls of waterfalls when you take a look at charting, and that is coming into the swing point, going all the way back, well, not the swing point, but coming back to the date of August 2nd. August 2nd high out there was 69.38. That is where you had a major waterfall out there. No, is that? Yeah, 72.82. Knew that wasn't right. So 72.82, that is really the number to be watching on the DAX. 877-927-6648. Give us a call, folks. We'd love to hear from you. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and it is actually this coming Wednesday when the German courts are going to rule on the European stability financial mechanism, so it'll be Wednesday, not Thursday, as I had reported. And you know how I know that, folks? Because we've got wonderful folks here in the den. They watch our backs for us. If you haven't test drove the Tiger's Den, go over to the homepage at TFNN.com while you're checking out the Tiger Dollar promotion out there and sign up for the Tiger's Den for 30 days. You'll see it's just simply an incredible group of human beings that are in there. If you want to take your life to the next level, that is the place to start. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding.
Yeah, good morning. It's a tough market right now to be short, but with all this news coming out, and don't fight the Fed and all that stuff.
Absolutely.
Yeah. So how does IWM look for a shot? Or should I wait?
You should absolutely wait. You know, if we take a look at the IWM, we'll take a look at the daily chart. The first thing that I would point to is, so there's a number of different things that you can take a look at if you watch this chart out here. Number one, let's just take a look at current price where it traded on Friday. It closed out at 84.26. It closed inside the swing point from March 27th. Now that swing point had 41 million shares. As you were coming into it on Thursday, Lou, was coming in with 46 million shares. So you were coming in with volume. Friday's action was light. You could kind of expect that with the action that we saw on Thursday. You only had 32 million shares, but you closed inside there. The first place to find any kind of a test would be a rejection of that swing point. Ideally, what you'd be looking for is a test of the 84.66 level, close back below it, do it on less than 41 million shares. You'd like to see it on much less than 41 million shares to then maybe consider a short ultra-term play, you know, coming into Wednesday. That's on to take a look at where the IWM is actually trading right now. If you step back a little bit further and you take a look at the B point of an A to B equals CD up, you'd be looking at the swing point from July 5th. That swing point high was 81.84, had 42 million shares. You actually got to close above that with 70 million shares, just under 70 million shares on September 4th. When you get above a B point and you take it out with volume, in this case here, which it did, that sets up and confirms an A to B equals CD up there. So if you're looking for an area where this would potentially pull back to, let's say that it doesn't get above this area and it starts to pull back this morning and over the next couple of days, you're going to look for the 82.40 level. That's the high of September 4th to be your area of support out there. So you're going to kind of have to watch that. But what the IWM does have, it has a confirmed A to B equals CD up that takes you to 85.17. That would be the one-to-one level. So ideally, what you do is you would be patient. Let the one-to-one A to B equals CD complete, and then take a look and see what kind of volume it has, and does it come back and close inside March 27th out there. But I think right now it is not the time to be putting on the short pants. I washed mine up, folded them, ironed them, and they're in the drawer for the time being.
I see.
Okay?
Okay. Appreciate it.
You bet. Thanks for calling. I appreciate that. And if we take a look also at the IWM and see if it trades up to that level on the daily basis, that level just being the one-to-one A to B equals CD, and it sure seems like that is the target. That is going after the swing point out there from July 7, 2011. That's where really the cascade waterfall began in the U.S. markets out there. The high of that candle is 85.97. There's 70 million shares out there. So you would be benchmarking that whole thing, the completion of the A to B equals CD. You'd be benchmarking it against July 7th. If you get a close above 85.97, that says 87.59. The 1 to 1.272 A to B equals CD is up, and that'll take it up over its highs out there. I believe that'll take it up over all of the highs. If we put this on the monthly basis, let's go take a look at that monthly chart out there, and that certainly will, because the high that you would be looking at is getting over July of 2007. Pretty amazing, huh? $85.74. What I say is amazing. Pretty amazing that you've got all the markets back at near their highs, and still people need the crack of a QE3. Now, speaking of the crack of QE3 and really just trying to understand what's really going on out there with QE1, QE2, and QE3 and how it really just messes up the entire game, it's nothing, in my opinion, it is nothing more than just a revaluation of assets. And if we go take a look at some of the indexes, what I've done, and I used to show this, probably a year ago when I was doing the radio show, I have this gold dollar value equivalent out there, and I just simply went back to, I believe it was November 25th, 2008, when the QE was first discussed. And at that stage, that's when quantitative easing, from a charting standpoint in my mind, really started taking place out there. And so you go take a look at whatever stocks or the index that you're in and say, whatever gold was trading at that day, how many shares could I have bought? Well, if you're taking a look at Apple, it makes sense. This red line on my chart here, folks, that's what Apple would be trading at the same dollar equivalent. Apple trading much higher. That makes sense because they're a profitable company. 877-927-6648. We get back, we'll go see how these markets are going to open.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow trading up 25 points right now. S&P down 1. Russell 2000 off a point as well. Composite down 3. Microsoft down 20 cents. Intel off 44. Google up $4 and change. Apple up a couple of bucks here. Leading the charge on the way up is the Google Apple tandem. Right behind them, you got Franciscus Holdings, FRAN. They had I think they had a pretty decent sell-off there. Don't get in front of that freight train. That is up 4% this morning. Wynn Resorts up 1%, up $1.05. Tesoro, TSO, the ticker symbol, they're up $1.05 as well. Cliffs Natural up $1.11. Rio Tinto, RIO, they're up 1.5%, and Talisman Energy, TLM, up 4.6% here this morning. That's popping to the upside. Dropping to the downside, Melanex Technologies off 10% this morning, down $10 and change. We'll go take a look at that, see what's behind that move. You've got Nordion Inc., NDZ, the ticker symbol. They're off 42%. Holy cow. They're off 42%. We'll certainly go take a look at that stock out there. An arbitration over canceled. We'll go take a look and see what that is trading down into. Titan Machinery off 15% this morning, down $3 and change. Plains Exploration and Production, PXP, off 8%. Anheuser-Busch, this Bud is for you. BUD, this is the ticker symbol, off 3% this morning. Rock Tennessee Company, RKT, off 4%. Guidewire, GWRE, they had a big day. They're down 5% this morning. Michael Kors off 3%, down $1.69. Again, 877-927-6648. Let's go back to what I was talking about before we went into break. So if you want to understand, a big move in gold, big move in silver, and those big moves, really what was fueling that is the anticipation of QE3, all because of supposedly putting more money in the environment is going to create more jobs out there. Nothing could be more false, in my opinion, than that. But that, irrespective of that position, let's just go simply take a look at what the whole monopoly game of QE1 and QE2 and what they've really done and whether or not there's really been growth. When you take a look at companies like Apple, we were looking at, where they've had just simply massive growth out there. Certainly when you go back to 2008, you would expect that buying Apple was better than buying gold out there. Just simply that's what the stock chart shows. If we take a look at the Dow, and again, I'm using November 25th, 2008, and all I'm doing, I don't recall what the price of gold was right now, but all I did was just simply took what the price of gold was and said how many shares of the Dow could I buy, and then just maintain that correlation all the way through. Well, what that says, if you would just simply take a look at what was better to invest in, gold or the Dow, or what should the Dow really be priced at, just to maintain that same level of value, because I don't, even though you have more gold in essence come onto the market each year, that is a normal cycle that exists out in the marketplace, and I consider gold to be more stable with regard to all of the currencies that are out there. And I just take a look at gold as being a currency and one that you can't print. You've certainly got to go mine, whether it's above ground like we do at Tiger Metal Exchange. And if you're looking for gold or silver, folks, give us a call at 866-618-8888. If we take a look at the Dow, I'm going to go ahead. Right now, you've got the Dow trading out at 13,290. But in terms of gold, back on November 25th, 2008, you should be at about the 17,900 level, and you're only at 13,290. So the market has not even been able to keep up with just simply revaluing the asset. If we take a look at other equities out there, and you can do this with any equity that you own. If we take a look at, let's take a look at IBM. So if you look at IBM out here and go back to that correlation, IBM trading higher than its value makes a lot of sense. They've been doing well financially. IBM, if we just took a look at it in terms of the valuation of what gold was back in November 2008, IBM would just be 1-to-1, would be priced at about 170. It's trading at 199.33. You've had some growth there. That would make sense to me. So if you want to understand just how strong the equities are that you're in, go back and take a look at that type of correlation. You can simply do it by hand as well, because you say this is how many shares that I would have bought, and you can go ahead and do the math on your stock chart out there. So I hope that's a piece of good information for you. If we take a look at the, speaking of currencies, let's go take a look at the euro out there. The euro, breaking all kinds of resistance barriers, even getting above 100% move, trading down slightly here this morning. If the euro does pull back, I would expect it will pull back all the way into this, what was the resistance line and now becomes a support line. That is of the head and shoulder pattern. That's the neckline. Where would that be? It's probably the 126. Well, let's just take a look at just a simple retracement of the last leg up. So let's take a look at off of the lows from the August 28 time frame when euro was out at 124.6 all the way up to the high. And so I would say the dead cat bounce at 0.382 level gets you, it looks like about 1.268. And change out there. That would be on the euro. The euro does want higher prices. If you take a look at the euro and just look at the patterns that were out here, you got two of those butterfly patterns, two 1.618 expansion butterfly patterns out there. Made a 1.618 expansion on the way down. I suspect that what the euro will do will make a 1.618 expansion on the way up. 131.7 would be that price point. If we come off of the of this butterfly pattern out here that goes back, the top of it being February 24th, we just simply take a look at a retracement off that swing point high all the way down to the low. What you'll see is that same projection that I gave you on the euro in the 1.317 level happens to be the 786 retracement out there. That would be making a butterfly pattern on the way up off of that smaller butterfly pattern. So I suspect that that is where the euro wants to trade to. What's that mean? Probably means that what the market does is it pulls back coming into today and tomorrow, into Wednesday. The German courts, whatever things they add or say, the ECB is going to go forward. That's what I would suspect that we would see here. So any pullback that you would see in the market, unless we see some other kind of volume coming out of it, should be nothing more than just normal backfilling of price out there. But again, you're going to pay attention to the Dow, because the Dow has been the weak link out there. That is the place to be paying attention to. Let's go take a look at some of these stocks here that are popping and dropping. Let's go take a look at that Nordion Inc. NDZ is the ticker symbol. Let's go see if that is moving down into an area where it broke out at, or if it had some volume down there. Down this morning with volume, down some 40-some-odd%, trading out at $6 and change here. Let's actually shift over. Let me see what Nordion, let me see what these guys actually do. An NDZ, again, is the ticker symbol. It would be good if I could just type properly. NDZ. Okay, Nordion Inc. They are pharmaceutical. So pharmaceutical, biotech, health science company. They provide various products and services using the prevention, diagnosis, and treatment of diseases worldwide. Doesn't tell us what diseases, just diseases. Well, whatever they've got a disease this morning. They caught a bad cold, trading down with volume. So far this morning, they've been trading for, about 12 minutes here, and this thing gapping down with, so far, 900,000 shares out there. Let's go ahead and pull this. This is coming back all the way to its lows. Let's go take a look at this on a, apparently, they provide various products, but maybe none that work. Because take a look at this stock. Let me see here if this is this is all the historical data that I've got. So let's update the chart. There we go. My goodness. So you got very few people in this stock in the money out here. If we take a look at the, can't take a look at last time this thing had high volume because it was the week of March 26th, but no wide price spread, 21 million shares out there. When I say no wide price spread, the entire week, the high was 865, the low was 812, so not much behind that. This is going to come all the way down to the lows from May of 2009. That's going to be in the 442 level. You're at $6.12, and nobody having fun at that party out there. Let's go take a look at Mellonix Technologies. MLNX is the ticker symbol. They're off 11% this morning. Let's see if this thing has some juice behind it. It does have volume behind it. You gave you the indication there on Friday. As we take a look at it, this thing moved down with 2.9 million shares. Now, the beauty on that, if you take a look at what it was doing on Friday, it was coming back against the area where it last broke out, and it last broke out with 6.3 million shares on July 19th out there. However, this morning here, you've got real air coming out of that balloon. It's done almost 2 million shares in the first 14 minutes of trading. 2 million shares going to be going up against this date where it broke out on July 19th. That is where the money managers right now are deciding whether or not to dump or come in and support this stock. The high of that is 96.50. It has traded all the way down so far this morning into the 96.27 level. That is on Mellonix Technologies. We'll see where this thing is going to shake out, but it looks to me like, well, we'll just watch and see how that battle unfolds. It's certainly going to be unfolding here today. Let's go take a look at some of these stocks here. Popping, Martin Marietta, MLM. I know they're not a multi-level marketing company. I don't see any news behind Martin Marietta, but it is popping to the upside. It's up $2 and change. That is the leader dollar-wise on the upside here. So Martin Marietta, let's go see what it is doing. Really not a whole lot. So it's up $2 and change. And Martin Marietta looks like it's got a high volume low out here That high volume low was on May the 16th. The high of that, the wide price spread, that's where it actually came off the bottom on May 16th at 10 million shares. The high of that is 25.05. So let's go back. Let's pull this back on a weekly basis here. Haven't looked at Martin Marietta in ages. This thing really just consolidating, has been trading sideways going all the way back into June of 2009. The trading range on this has been about the $21 level up to the highs here in May of 2011 out at 37 bucks and change. Of course, if you pull this chart all the way back, kind of dangerous, isn't it? Made a high of 136 bucks back in February 2006. It's not going to see those levels anytime soon. That is on Martin Marietta. Let's go take a look at PPG Industries. They're the next in the clubhouse. PPG, I can't imagine we'll see too much in the chart out here, but they're up a couple bucks and change. That's up 2%. It is taking on a swing point. Okay, so it's trying to get over a swing point high. So let's go see what, how about that, an all-time high. So PPG Industries here, the swing point high we're looking at is July 20th. The high out there is 114.62. You're 115.43. So let's pay attention to this, see how this was coming into that swing point on Friday. Let's go ahead and just simply mark the swing point high, and we'll take a look at the volume out there on the bottom so that it becomes easy for you to visualize. You can see it's taking out that swing point without a volume, gapping up this morning. As it was coming in on Friday, 1.3 million shares was going into 2.9. Thus far in trading, only 198,000 shares in 16 minutes of trading out there. But this equity here, it's got some pretty nice support at the low of 106.85. That 106.85, when you take a look at this. So here's where, if you're taking a look at gaps, open windows is what I like to call them. This open window is still open. Nobody broke this window here. That window coming back to the day of July 19th, the low 106.85. We're going to draw our line across the bottom of it. And volume-wise, we'll go ahead and do that as well. So that's going to be the black line that's going to show up on the chart. So this equity here gaps up, PPG gaps up on July 19th. Comes back and tests that open window on August 2nd with 1 million shares. So 1,063,000 shares. We're going against 4,000,002. So less than 50%. That's a nice test out there. That area held. It came back to that level. August 21st, moved down to a low 107.16, 941,000 shares going against 4.2. Went ahead and took off on the 22nd, got down to the low of 106.86. Let's see, did it actually test it? 106.85 was the actual low from July 19th. That day, also 1.2 million shares. So if you're looking for support on this, it's really clear. It's going to be the low of 106.85 on PPG. If you were in that equity, if you get a close below that, you might want to consider just tightening up your stop, because that level has been tested a few times. I suspect that window will stay open here for a bit. That is on PPG Industries. Let's go take a look at what else do we have here popping and dropping. Titan Machinery, TITN is the ticker symbol. And let's see here what is behind this move. They're down 20% this morning. Looks like they're out with numbers. They did their 6-month revenue was $831 million versus $629. Their income $29 million versus $25. And their earnings per share 60 versus 69. So the guidance here, their forecast, what is their forecast? Must be off the mark. But let's go take a look at the equity, see where it is trading down into. Again, TITN is the ticker symbol, gapping down with volume this morning. So let's go see what this is doing. Apparently it already had given us some signals out here. I showed some AB equals CD down patterns on this. So you had big volume coming out of this thing on June 7th out there, 2.9 million shares. This thing obviously going after much lower price. When we come back, we'll go take a look at Titan Machinery as it is trading down 19% this morning. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks, and it is Marvelous Monday. That means the Money Masters following this show. Then we go to Basil Chapman, and Basil's going to have a double header. He's filling in for Larry on the 12 to 1 show. So you're going to have Basil Chapman from 11 to 1 p.m. this afternoon. Then from 1 to 2, it's Daryl Martin in Dallas, Texas, doing the Diagnostic Trading Hour. David White back here in downtown Clearwater on the beach. From 2 to 3. Ken Shreve, the warm-up band for the Tom O'Brien Show. Ken from 3 to 4. If we take a look at the markets here, the Dow down 24 points, S&P's off 2, Composite off 8, and Let's go take a look at the King. Let's go see what King Dollar is doing here this morning. It's trading up 6 pennies out at 80.30. Let's go take a look at chart patterns that are out there. If we just simply take a look at, well, number one, you can see I've got the price, the descending price channel that the U.S. dollar has been trading in after it made the high out here, made the high on the weekly chart, actually, when it made a bearish engulfing candle. The high came out on July 24th, or certainly during that week, out at 84.25, its most recent high, I should say. And right now, if we take a look at ABCD patterns that are out there, let's take a look at those, see what it's doing. You start off with the high out at 84.25. That's your A point. My B point on this would be the low coming in on August the 7th out at 82.07. It retraces back up into the top of that downtrending channel up to 82.96 on August the 16th. You can see so far it's made a 1 to 1.272. A to B equals CD. That price projection was 80.19. You hit that area on Friday. And you close just slightly above it. You got to 80.17 this morning, closed just slightly above it as it's coming into that downtrend channel there. So that's an area. So it's in an area here where it could find some support on the A to B equals CD on that trend channel. If you also take a look at just simply the most recent retracement off of the low to high, you would go out to the swing point of May 1st. Low of 78.67 all the way up to that high at 84.25. You do that, you're going to see that at the 0.786 level, which is looks like $79.86. That is another area where you would find some support here on the U.S. dollar index. Now, one other area would be taking a look at the expansion of swing points. Well, the expansion of swing point is going to be the 100% move of a move that was holding the U.S. dollar in check until the jobs numbers came out, which just simply sent the euro up and sent the dollar index down last week. And if we take a look at that, let's take a look at the May 21st swing point. That was the move of a move. That was 81.03. Let's go ahead and draw this in. Let's take a look at the expansion of that swing point all the way up to the high that came in on July 24th, and you'll see that the 1.272 level, $80.15. So 80.15, and you had the U.S. dollar index actually get down to $80.14. How does that work? 80.14 versus 80.15 as the 1.272 expansion. You know, the U.S. dollar index really kind of setting up as a range here from 79.86 to where it's trading at right now as a area of some strong support. I would expect what we'll see here is we'll see a little bit of a bounce on the U.S. dollar index, a pullback on the euro as well. And where could it move back to? It could certainly move back up to the top of the trend line of this descending price out here. So that's on the U.S. dollar index here. If we take a look at, just about a few seconds to go. So, folks, do yourself a favor, please, and that is this. You know, there is nothing better than being able to invest in yourself. As I opened up the show talking about enriching your life, and we certainly hope here at TFNN that we're enriching your lives. If you want to enrich it further, go over to the homepage of TFNN.com. Sign up for the Tiger Dollar promotion out there. There's not going to be another one like it, and it expires this coming Sunday, folks. Thanks. Have a great day. I look forward to seeing you in a few or tomorrow morning. Bye-bye now.